America, Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
I can't believe it happened.
Good morning.
But it happened.
What happened?
The market did a data point that we now have in Option Omega that we didn't have before. Those are rare days.
There it is.
Rare days. But we
Really?
now have a data point that we didn't have before. Now someone can say a gap up of 100 and something points. And then when we drop down 100 points, what do you do? And that to me is a very listen, we talked about it yesterday. You know, the market does what the market does, and that was a wild hour. It lasted about an hour and a half, I think.
Yeah.
But that was a crazy hour.
Yeah.
And people are like, you know, it happens all the time. I did some research. It actually doesn't. That one
Really?
That one has happened 3 times in history, like since the beginning of the stock market.
Are you going by percentages here? I'll be OCD.
Percentages.
So the only thing I'm looking at is April 7th to 8th. I know we had a large gap up and then a massive tank, but maybe percentage wise it wasn't the same.
Yeah, percentage wise it wasn't.
Did everybody survive?
No.
Raise your hand. Raise your hand if you did not.
No,
survive.
we're actually we're all dead. This is
heaven chat.
Chat says just buy puts.
Because listen, you can't just let you can't let it go on days like that. You got to be able to look at it and laugh a little bit, even if you're completely
right.
You died from it, because that's a crazy. I mean, it's just a crazy move, Dan. I mean, you've been teaching options a long time. Was there any panic in the room yesterday?
I'll tell you why there was no panic is because literally I was done. I was finished teaching something at 10:30 Eastern, and I knew I had a break so I went for about an hour and a half to a outdoor, have a sandwich with some family members, and I came back and I thought there was a mistake on the thing, because when I left, we were at 10:30 yesterday morning, we were at highs, right? We were high, and then it's like come down, and which was pretty crazy. It's like, I could just tell you when I had a calendar, I just, because when it's for range bound trades, initiated, when you're seeing candles that are like that, it's basically saying the waves are about 12 feet high. Hey, if you want to go in very cautiously or small, fine, but it's not your normal range bound, right? Type stuff.
Yeah.
But the candles were big. And I put one trade I put on vol came down to 19, put a calendar trade on 40, 50 points below the market, right? So I'm thinking, okay, and the deltas were, you could put a calendar below the market, and the deltas were just a 10 short. It was nice. And when I came back, it was like, wow, I've never seen anything. But the only lesson I would say on that with people is it's not that, as Troy and Rusty and me would say, there's not that many precedents, right? April, a few others. But if you've been looking at the last 2 weeks in the market and the size of the candles, right? You're at least, you've at least been at the beach with 6-foot waves. Now they're 13, but at 6, they were a little higher than normal. So at least you're thinking that way, right? I mean, you're thinking, wouldn't you say the 3, 4, 5 days before yesterday, we had close to 100-point ranges every day. So at least you're in that. It shouldn't be like, oh my, right? I mean, there's part of oh my. I mean, it was a big move yesterday, no doubt. But I think it's also keeping it in perspective, because what concerns me at times is when people will change and I know you guys have talked about this, change a backtesting plan when they lose. And it's like, slow down. Why slow down before you've done a good back test? You lose a week or two, like when you guys are saying, was it DC week? When was that? Like, I think last year when we were going to,
yeah, that was around Liberation Day. Was
yeah,
at least for my DCs were the most insane vol I've ever seen.
Well, and before you completely change something, right? Because you could every time your back test loses, you could change it, right? And I think it's trying to get some perspective a little bit. And the good perspective yesterday, as Troy brought up, what did you say, Troy? It was only, other than April, May. I mean,
there's percentage wise, it was a wild swing.
Yeah.
And here's the one that's the real wild one. This is how you could test it, really, going back to 2013. VIX gap down of 15%.
Yeah.
And then moves up 30% from that low.
Jeez.
That's a wild move. I mean, VIX was at 19 at the open.
Right.
Oh, was it really?
Yeah. Yes. And I think it peaked at 28.
Wow.
And that's what does that mean? That means in real time, people are going 30-day out and they're buying puts. I mean, that at a basic rudimentary function, that's what's happening. Is the market's dropping, people don't understand what's happening and why it's dropping, and they're buying longer dated an option Omega land, longer dated puts 30 days out, basically leaps. An option Omega land, leap puts 30 days out. And vol's just getting, bid like crazy.
Yeah.
It reminds me of do you remember the first Friday the 13th movie?
I don't think
I wasn't allowed to watch that, Troy.
No, I wasn't.
Come on.
I wasn't either.
I wasn't allowed to watch like that.
But you still watched it.
But you still watched it.
I never watched the whole thing. But
YouTube,
early days of YouTube, basically, you watch every scary movie. So at the end of, it's a classic trope, but basically, I'm not going to give away any spoilers here, but in the first Friday the 13th, the killer is not Jason. It's not the guy with the hockey.
I didn't know that. I did not know that.
It's actually Jason. It's Jason's mother. So you figure out.
You spoiled that for me.
I'm gonna give you the whole plot real quick.
Okay. Save me from reading it on
the first Friday the 13th. Crystal Lake. They go to this stupid summer's camp. People start dying. Okay. The mother is killing all of them because one of the camp people let the kid drown. Jason drown in previous years. Oh, so at the end, it's Friday the 13th. At the end, they went. They escape. One girl escapes. She's in a boat. It's an iconic scene. She's in a boat. She's escaping. It's like gentle music playing. Yeah, that's what the market was yesterday. We've escaped the 5 days, the 10 days of just red days. Everything's going back to normal. We're back to life. From behind the boat, a Jason child arises from the lake, pulls her down into it. That's what yesterday's was. Was that a long story to explain yesterday's stuff? Yes.
We call that in the biz a tortured analogy, but keep going.
May I remind you, I don't like fancy things. I don't like fancy wancy things. I don't even like fancy wancy. Take a trip to Nancy things.
Okay.
What I like is wasting your what I like is wasting your time and mine.
But the visual stick with you. Let me ask you, was that related? I didn't follow that hour and a half as much. Was it related to a tweet, as everybody wants to blame everything, or no?
There was no. There was
no Trump tweets.
He can't be blamed for that one.
Hey, here's a question. Has
the narrative that I saw, Dan, was this. The narrative that I saw, and again, here's what I think. I think people just take narratives They have there's like a roulette wheel of narratives, and they just like take them and throw them. It's full of crap. But everyone was like, "Oh, the rally was Nvidia," because there was the earnings, and the earnings crushed it. But then the sell-off was the fear that there wouldn't be rate cuts, or that there's an AI bubble, right? Or like take your point. I heard both of those narratives. Who the heck knows? The fact that like the market would dump 3% in a day because there may not be a 0.25% rate cut in December, you're like, that just seems like not a healthy market if that's true.
No, not at all. Yeah.
Well,
really,
What'd you say?
Yeah.
It's like in Friday the 13th Part 4. When anyway,
Jeez, so wait, stop. Shut it down, Troy. Shut it down.
All right, so listen. So the data will be fun. You can go in. This weekend should be some fun testing. What could you have done next time that the market, gap fills? Not only gap fills, but just continues to get pummeled. Matt, you have a test that I want to look at real quick. Is that okay?
Listen,
and
this isn't a test. This is a whole box of soap. We're gonna make our stand on this soapbox here and talk about.
Oh, I was like, what analogy is this now? This is
it's like in Friday the 13th Part 7 when he's in space. When Jason goes to space.
They have 7 of them.
Oh, do they have like 14 of them?
Oh my goodness!
Do they have Friday the 13th Part 13?
They hold on. This is important. They literally have a Friday the 13th where he's in space.
I thought you were making that up.
I did too. Yeah.
No. Matt, what? This doesn't seem good. I'm gonna be honest with you from what you said.
It's not good. I didn't trade it. I traded a better
I'm a
version.
little bummed. We were promised.
Do me a favor.
At the end of this conversation.
Hit new backtest and run this through yesterday, and we'll see if it does anything yesterday. So a couple weeks ago, not that long ago on the show, I talked about a couple ideas. And Dan, have you ever heard anybody Option Omega talk about Thursdays? Has that ever come up?
Never have I heard you.
So listen,
never.
I told people I did not trade this test. I traded 2 better variants of this test yesterday. And Thursdays, for whatever reason, since dailies have had extreme movement. And there are versions of this test that you can make green, but if you're trying to like microfit this test, you're going to completely miss what I'm trying to say. What I'm trying to say is this: if you spend some time in the backtester on Thursdays, you will find there are a small number of data points. Yes, Troy, this is actually closer to what I did. A smaller number of data points, but you will find these outsized moves. We don't always talk about exactly what we're trading or what we're not trading. I will talk about this yesterday. 2 of the trades I had on yesterday. I buy a QQQ Strangle on Thursdays, and I also started something a little over a month ago and talked about it on the show. I call it the nuclear put every day. It's a fixed price SPX put, quantity irrelevant. It's really irrelevant exactly what I'm doing because, again, just go back test this, find a version that you like. And that the QQQ Strangle did great. I'm calling the police on myself because I did not trust the backtest. I took it off early.
Matt, you've been my hero in that area.
I'm just being honest.
My hero.
Listen, let's be honest. These are degenerative bet trades, and so like
So I'm gonna stop yapping here. Let me tell you what I did, and then I'll get your take on it. So the nuclear put I took off, and it made 50x, and so that was in SPX. And here's how I think about that: is I just think of that as 50 more nuclear puts. That's all I'm thinking about.
To feed the
it's just going to give me another month. You know, the past month it's been a
Because
bust.
yesterday
It's
wasn't
gonna,
actually
it
some
wasn't an,
news-driven geopolitical
that's
crazy.
right.
Oh my goodness!
This is
Like
exactly what I thought of.
we're gonna have to start shooting deer with bows and arrows for food. That was not
Right.
yesterday.
And so it wasn't a nuclear event. It was just a mark.
I
So
love the image.
I
Yeah.
I took that off for 50x. I looked in the back test. I tried to take it off when it was like 65x, and I couldn't get filled because it was a green candle. And so I just market ordered it and got out for 50x. It made it to 70x in the back test. So like exactly what I was seeing. The QQQ one, I slightly underperformed the back test. Again, I didn't trade exactly what this is, but it's real similar. And you can probably find a better version even than what I traded. Here's the point, guys. Here's the point. My nuclear put, the back test I have for it. And again, if you want to back test this, just do this. Do this. Back test early in the morning, buying anywhere from a 10 cent to a $1 put every day. That's it. That's the back test. Just back test that. It's take you no time.
Dead simple.
It's dead simple. And here's what I want to say. I started this mid-October. That back test went to the moon in early October. Yesterday it failed, but I took it off for 50x. Basically two occurrences in 6 weeks where we got to 70x on just buying a junk put at the beginning of the day. Two times in 6 weeks. That's so. What do you guys think about that? Number one. And shout out to the chat. Shout out. I also did your nuclear put and closed just like you. Here's the thing. I'm calling the trusted backtest police on myself because I am I'm probably over, I haven't looked, I'm probably over 95 to 97%. I just completely automate. Things like yesterday are difficult to backtest. They're not difficult to backtest. There's not as many of occurrences. The value proposition for the backtest is different when there's so few occurrences. What do you guys think about that thesis? When there's so few occurrences, how do you think about something in terms of a black swan? And one of the things I'll say is black swans seem to be getting more common.
Less black, more gray.
They're more gray because April, that was a black swan too, going up 10% in a day. That was a black swan for sure. Yeah. So what do you think about this whole, how do you guys think about backtesting when you're backtesting a hedge and there's so few occurrences just because it hasn't happened?
I love it. And I'll tell you why. It just because a backtest hasn't seen an occurrence it has nothing to do with whether that occurrence can happen or not. I mean, that's the whole point of data in general.
Yeah.
And I think, it's important to remember, like, listen, Dan has taught me this. Anybody's ever taught me this. Everybody who has survived in this industry as a trader knows when to be net long gamma. That can be different things for different people, right? But I mean, Dan wears a t-shirt when we go to eat lunch, and Dan, correct me if I'm wrong, but the t-shirt says something like just buy a stinking put.
Yeah. Something like
It's awesome. It's an awesome shirt. Just buy a stinking put.
Yeah.
And that to me, Dan, I mean, you've been doing this for years. Why buy a stinking put, Dan?
Well, and it's here's the thing. When you think about options, people can options. I've heard this a million times from people. I don't want to trade options. It's just risky, blah, 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 blah. Well, they're focusing on the part of options that kind of gets a black eye, leverage for people who don't know what they're doing.
Selling natural gas puts.
Who are misusing. It's like using a baseball bat in Chicago for gang warfare versus baseball. It's not intended for that, right? But when you're looking at they were invented for risk management, the tail stuff, I didn't read, when I was first started trading in the pits in the 80s, I didn't know anything about, what's his name? What's his name?
Nassim Taleb. With
the great work that he did on the tails and all that. But traders, just from standing there, not that you had to be the smartest crayon in the box, but if you stood there, if you asked any trader, right? Do big moves happen more than the log normal curve says or whatever they say? Yes. Right? Were they they didn't understand it, all the testing and everything, but did they always have small little putties, right? Or did they always have net long units or
Yeah.
have some little insurance? That was always just part of the thing, whether you call it hedging or routinely
drag, built-in drag.
Always, that was always a big part of people's business, and a couple of reasons. One, they wanted to they liked the business. They didn't want to go sell shoes, right? Or whatever. So they wanted to stay in the business. And we'd always routinely, I always told you this before, we'd always routinely, but when they had the precursor to SPX OEX, I would go in there. I worked with the Nigerian brothers. It sounds like wrestlers, right? I worked with the Nigerian, but I would go into the OEX pit, once a month or twice. We'd look and say, okay, if we had a 10% move in the market, or a whatever the move you want to model, how much you'd be down, right? And we'd say, that's unacceptable. We'll go spend, $3,000 or whatever the number was, and buy these little puts that you hope, right, go out worthless.
Yeah,
to a degree. You hope they got worthless because you had enough positive theta. But if we have some crazy event, it's more of a vol type thing or whatever, you're fine, right? And I think that's, what you guys are saying, what Matt's saying, I think that's normal part of looking at your portfolio, looking at, and I think these nuclear puts are extremely normal. And I think people are, and I think, I would love to see if from the research on the tool, just, that's pretty amazing what you just said. Would you say 2 days out of 6
It's
weeks?
happened 2 times in the last 6 weeks, which
That's amazing.
I get, but that's also randomness. I started.
But your point is that it's not super rare. This isn't once every 5 years.
It's not that rare.
Fascinating. That's Dan's point.
Well, right.
And to tie this kind of into what Troy was saying at the beginning of the show. So I hate to correct you live, Troy, but we did have a 1.5% gap up from the 7th to the 8th of April, and then a 4% move down by the end of the day. So similar structure. But here, to your point, here's why it's different. What was the VIX Monday, April 7th? It was 40 something at open.
Yeah.
It wasn't 19.
Yeah.
And so when VIX is 45, guys, are any of us shocked that it does things like that? No. It's bananas. We're in it's foreign territory. But when it's 19, you don't expect that to happen. You just don't expect.
Well,
and that's why Matt's things went nuclear. The nuclear puts went nuclear because they were dirt cheap compared to what they should have been priced in had vol not gotten completely schwacked.
Let me comment on that just for a second. And the reason I'm not sharing a back test and whatever, it actually doesn't matter. You should do this yourself and figure out one that makes sense for you. If you're interested in this concept,
don't copy trade this.
Just figure out one that makes sense for you. It's trivial to do, and it might be a red back test, but here's the point. This put is 100. I've told you guys about it before. Oh, my put today's 400 points out of the money. Days when we move up
laughable.
Big. And I'll be honest. Here's what I do every morning. I buy the put in the automation. I halt management on it, and I mark it 0. Mark it 0, Smokey. I mark it 0. I don't even think it's just drag. Here's the point about yesterday. I didn't do that yesterday because I didn't mark it 0 because I had a super, super busy day. Had a couple meetings, didn't know what was going on. Came back from lunch and I was like,
I was texting you. I was like, Matt, check your put.
What?
Matt, check your put.
Check my strangles.
I texted him on the phone. Hey, your put might be worth
listen, this is,
meals.
We're talking guys, I'm not freaking retiring. This is a small number.
Then what were those yacht pictures you were sending?
Small number.
Here's
Here's the point about vol that I want to make. My put 50x, 70x, it didn't get in. I think I was still 1% away from the strike. That is vol. This is a whole nother week of shows. But those 112 trades that got super popular, what people do not flipping understand about them is it is about the vol. And you can be long that vol or short that vol. We had a discussion on Discord this week with people talking about zero DT premium. And I'm like, why do people just assume that you're short the vol? You have optionality. You can be long the vol. I had crash puts yesterday that are in December. And let me tell you, they start with a 2 in the SPX. It's literally a nuclear scenario. I took them off yesterday and they were almost back to scratch.
I think that is
because it's about the vol.
Yes.
Oh.
Here's the thing. Everyone wants to assume, like on any given day, that your max risk is your max risk. But when you add long gamma, when you add these cheap things, what you're doing is you're saying you're the one guy who's saying you're in Manhattan, and you're the one guy who says, listen, if a super villain who won't die was ever to come to Manhattan, I'd be ready. And people are like, you're an idiot.
Yeah.
This is so stupid. But then you're sitting there, you see that, and you're like, well, when Jason comes to Manhattan, I'm going to be, and so this is the thing. In all seriousness, though, I want to look at one thing real quick. I said just pick the picture back up again. Here's the thing. So you buy a
look. What is that tool?
Yeah, what is that?
Oh,
tool?
This is a modeling tool from Option Omega.
Okay,
best in class,
world class.
Some people have called it a magnum opus. But anyway,
many people have said.
Many people have said. Thank you for attention to this matter. If you you buy a put, this thing is going to expire worthless.
Yes.
Almost every day.
Right.
Okay, so you don't load up on it. You don't put 20% allocation on it.
Right.
You have to figure that out yourself, right? But here's the deal, and I hate to be like Judgment Day stuff, but this is part of risk, right? If anything actually ever happened, not financial conditions, not like, oh, the yen is crashing, like all this stuff. I'm talking about like things that break markets in a way that, because it breaks humanity. So think 9/11, right? If there was, we call it the nuclear play, but if there ever was a nuclear play, what's going to happen? Just try to think through scenarios ahead of time. You're going to, the market's going to drop algorithmically. I can't even imagine at this point, but let's say there was a nuke. Okay. The market's going to drop 1,000 points and it's going to immediately close. That's what's going to happen, right? If they are not going to play it out. So I hate to be like Judgment Day guy,
right?
But this is the power of gamma in this situation. Is what do you want to happen? You want to afford, if everybody survives it and the market ever opens back up again, you want to be able to look at it and say, oh, I had a 50-cent put or $1 put that expired 1,000 points in the money that day, right? That's what's going to happen. And so I have always, Dana and I have talked about this for years, but like, if you ever, people who sell naked vol, I've never been that guy because it's this scenario that scares me. Yeah. Right. It's that scenario that gets me. And so the importance of being long units is it's one of the key things in risk. Right.
Oh, yeah.
Right.
This is and again, yesterday was nothing. This is the thing I have to remind myself on. It gets exciting as a trader. I was at a funeral.
Yeah.
And I was
that's not connected to your trading excitement.
No, but I was the only one there. I was the only one there looking at my phone when I went to the bathroom and be like, hey, how you guys doing? You guys doing all right?
Boy, this is honest. This is honest, Troy. So can I I'm not trying to hype this show I did like 3 weeks ago, but this is because the community, I think I was the only one on the show and there was a lot of community interaction. And one of the main theses, I think Mark, you might remember this, somebody might remember this, is these days with these huge sell-offs, they are not events that make the history books.
Right.
It does, like, somebody in the chat almost got, it looks like an 80x or 90x on a put yesterday. That's what I'm talking about. And it didn't make the history books. Troy, what you're saying is if General Zod comes to Metropolis and the market closes at 4,600 and triple limits down, nothing else matters. But if you're long units, that might matter.
Well, wow.
Yeah.
Yeah. And just one.
If that's Freddy Krueger, right?
Yeah.
Don't do this.
What were you saying? What were you saying, Dan?
I was thinking back, like the first big kahuna move, when I was trading in the pits, Tom Lee, thank you, 1987. And I remember 1987, percentage-wise, first thing, just preamp, a quick note to that. Buying puts, people think of price. In the scenario Troy brought up, where the SPX actually goes down 1,000 points, that's even more incredible. But I would say 80 to 90%, you're not buying it for the price move. It's just like Matt yesterday. Matt, do you remember where VIX was when you exited the put? Was it like 27, 28? And that's only 9. I mean, that's
I can look.
That's a pimple on an elephant's behind. I mean, that's only 10 points. I mean, 10 points and he made 50 or 60x. But the point I was going to make, if you look at the 1987 crash and you say, well, how did a lot of the market makers do in the pits? And it was really, for most of the people, it was their best day of their career, and even ending up. And it wasn't from short premium. It was from long premium. They were just net long units because, a lot of if you think in the 80s, if I can remember correctly, the 80s, the market was going up and people generally, they're more sellers of options. It's just, they're doing covered rights or whatever. So a lot of market makers, you had net long units. You were long calls and you hedge against short stock. So you had a big fat ratio back spread on. And when all of these stocks went down, people, guys in the pits were short options against hedged on stock. So when the market opened up down, there were people that were, they were short 50, 100,000, 150,000 shares of stock from the ratio back spread. And so they're just buying it all in. It's similar to if Troy had 100, if he's net long 50 puts on a hedged or on a ratio back spread, when it goes down because you're long gamma, you are short a boatload of deltas, right? And then you're just selling out the puts. And that's really how they generally, but they pick times to do it, right? When vols are lower, they may load the boat on back spreads but yeah, Matt's put yesterday. Matt, when you sold out the put, you said it was still 1% from the short strike.
Yeah, I think I sold it at 1247. So like, I'm just pulling up a chart here. I'm looking at the VIX chart and like VIX had definitely peaked by then, but I sold it at what I would say is an okay. Again, I've done a couple of these crash things. I don't know how you can, I think it's impossible to time them.
Oh yeah. And that was a 0 day, right? You did.
Yeah, just a 0 day.
0 day.
I mean, max gamma, right? We can talk about it. Like you're not going to get any more gamma than you will on a 0 day.
Yeah,
like
that's right.
It's the torque. That's how I think of it. When you're, it's instant torque.
Yeah.
Let's talk about today.
Troy's car.
It's
That's
Troy
right.
car.
That's right. Let's talk about today and what we expect from today. Because if I know one thing about my predictions, they're almost always right. Just kidding.
Do you want to sell a service where we just copy trade your predictions?
Copy trade the put.
What could go wrong?
Just buy a put.
Like Kramer. Yeah.
That's
exactly.
Right.
Sell. I think today is going to be a wild day. I think today's going to be a wild day. Here's the thing that's interesting about yesterday, that because of the move, we didn't even really talk about the intricacy of it. We were down 80 and we had a 70-point rally.
Yeah.
As well. We almost got back to unchanged for the day. And vol went down to 24 again.
A little dead cat bounce.
I expect we're at the bottom of, we're at the bottom of a range. If you look at here, this is just the old market profile chart.
Yeah.
I mean, look at where that line is yesterday versus, versus October, maybe. We're kind of like at these lows that we've been at, right? And we've bounced every time. And I think today is going to be one of those days where we really have to bounce if we're going to bounce. The market doesn't just sit here. Now, watch it sit here. But I'm saying on any given day, it might sit here. But we're not going to sit here for a long period of time with VIX at 25. We're not going to sit here and VIX just slowly die and us not rally.
Yeah.
Right.
So VIX is elevated this morning. VIX is what's VIX at right now? 25, 41.
Looks like it may open down a point from yesterday's close. About right.
Yeah.
Yeah.
But, I expect that on any move up when VIX is over 25, the vol's looking to get crushed a little bit. And so, this is a day where maybe if you really kind of are, you have longer dated stuff that you put on. I mean, one of the tests that you could look at is when VIX is elevated, going farther out with maybe call verticals, something, and this is coming from someone who's likes to be short the market. But I mean, Dan, I look at that chart and I say, look, we're either at the open, I imagine it to be pretty aggressive, or we're going to rally hard. I'm reminded that I was here in Denver last Friday. I was in Denver at a coffee shop at 6:30 in the morning, I believe, Mountain Time, doing the show. And I said something similar because we were down 90 points at open. And I thought we were going to flush, and we proceeded to rebound and go up 130 points for the day. So there's a part of me that thinks, dude, I really do think 0-day stuff is starting to drive everything.
Oh yeah.
And I mean, it like what I'm thinking about is we could do some shows on this. Is like maybe I need to do more nuclear stuff that's actually like the cheapest thing you can do. And maybe that like both ways, because we don't ever talk about hedging to the upside. And that day in April was the biggest
10% move's a big move.
That was the biggest black swan of the year. Would you say, guys? Right? I mean, it has to be
the largest move of the year, whatever you want to call it. Yeah.
Yeah. And I think longer than
I don't want to overuse the term black swan, but yeah.
I do want to say, because I like throwing out things that are probably wrong. I think a 10% move in the day is probably the black swan of the decade.
Yeah.
Yeah. Oh yeah. That's
let's not. COVID was a 10% move in a day is.
Yeah.
I mean, the 87 crash is 20%. We're halfway there.
Downward.
Right.
10% upward move in a day.
That's pretty unusual.
Shocking.
Dan, like, can you even think of a time that you remember that happening?
No, not anything memorable upside. No.
Upside. Yeah.
That's
a roller coaster up.
Yeah. Opex, I forgot his show how busy yesterday was. Opex is today as well. So, Dan, I mean, I don't know. Should that play into this at all today?
What's the what are you saying? Opex? What the
today's? I think option expiration.
Oh, option expiration.
Yeah.
I don't know.
Monthlies.
I don't know. I mean, it could, but I think when you're moving as much as we've been moving the last days, I think that's like, people get big into like open interest, and there's a lot of open interest here. We're not moving. I said, when it's like in the ocean's a big thing. When the market wants to move, I've been in the pit where there's a lot of huge open interest at a strike, and the market just like, see guys, whoom, goes right past. So I just think, my gut for today, and it could be totally wrong. I mean, I agree with Troy. We're definitely over the next 2-3 days. VIX is not sitting here at 25, right? But today, with the psychotic nature of yesterday, it wouldn't surprise me if it's just kind of a low range day, just people are exhausted. The only thing that concerns me is, the old Friday effect, right? Especially when there's been news.
Yes.
Friday, do you want to go home over the weekend with, that sometimes can get people a little squirrely. But, to me, the only thing I'd be looking like today with the VIX at 25, if you're going to sell some volatility, I wouldn't be necessarily buying, but I'm talking maybe 14 to 21 days out, maybe a little bit of short Vega because you get the low gamma. Now, if you're talking shorter term trades, 0 to 2 days or 0 to 3 days, I mean, I would think for a day like today, which is tough after yesterday, but you would think, okay, you could do a 0-day iron condor on a day like today. You're getting a lot of room, aren't you?
Yeah.
You're going to get a lot of room on a day like today, but you're spooked from yesterday. Speaking of the movie Troy was referencing. So yeah, it should be interesting. Let me just say one thing about, you're talking about hedging the upside. Sometimes you can use when VIX is, it's great the 0-day hedging. And I think that's genius how Matt was talking about that. It's just a disciplined approach over time. But, we'll have a time when VIX will be 13 again or 14. Right. VIX can stay down. In that case, if I'm getting protection, in that case, I might go out 4 months, 5 months, because sometimes you ever look at out of the money calls in VIX when VIX is 15 or 14 or 13, you look at out of the money calls and they're like 6 volatility or so I think it's, it's just, I just think that should be part of somebody's game.
Yes.
This nuclear thing isn't just it's a steady diet of your preparedness for something crazy to go on. And I think, shout out to Matt for just the disciplined approach to it. Now we don't want
being a good Boy Scout.
Listen, there's people in our
yeah.
There's multiple people in our Discord talking about my put triggered, my put hedge triggered, my comments in the chat about, so listen, I don't know if it's going to keep happening, but
now, Matt, when you said someone's saying, but the put hedge triggered,
I don't know what that means. I just know that people are posting screenshots and, they can share more if they want, but there's clearly some people hedging intraday against these big moves. And, man, someday I know it's about time for the bell to ring. I want to talk another hour today because Dan, it's got me thinking about so many things you've talked about on the show before about, like people who just sell vol all day, mixing a Rick in or a long Strangle in, it's pretty interesting when you have what was it, Rusty, a 3% move intraday yesterday?
It was about 3% yesterday.
Wow.
I will say this, the only thing that we have to tell people about, the big caveat, and maybe we already did and I missed it, is that if you're going to do this, psychologically it's tough. It's going to be tough to lose for a year or 2 years. We don't know next time this event will happen. Are you the kind of trader that is okay winning, which I hate the term even, but winning the trade, 1% of the time? Can you handle that? Or will you quit it when it loses 50 times in a row and then the next day it hits a 50x? Like, you have to ask yourself that question.
To me, that's the most important thing we discussed all day, is because people would see the excitement. Okay, I want to have a trade like Matt, and they go the next 20 days and they bleed. They bleed.
Right.
Yeah.
Yeah, because the odds of this happening again the next 20 days, well, who knows, but probably low.
Right.
Especially if VIX gets back to 19. Like, if it's that cheap again, it may not be that cheap for a while. Vol might ramp and stay elevated through the holiday season. Who the heck knows?
Yeah.
Well, on that note, we'll answer the question ourselves today. Do you feel like being a winner or a loser? And we'll check back in Monday. So have a good weekend, and we will see you Monday.
Yeah. Bye.